Hello, 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 and welcome back to the podcast. Thank you very much for being here. Today, we are going to talk about all things life insurance on this podcast. It is not often that I talk about life insurance companies in general and their financials and all that good stuff. And the reason why is because there are a lot of good mutual companies out there. And I just don't think that there needs to be a war amongst life insurance companies. I do feel like that it comes down to the agent. Is the agent serving you? Is the agent doing their job? Is the agent full-time? Are they part-time? Because you can't do this job part-time, in my opinion. You should be doing it full-time because there is so much to learn. So I just got back from a 1.5-day conference at the One America building in Indianapolis, the One America company in Indianapolis. And that is who I write the majority of my business with. Now, some people might say, oh, that's not a good company, yada, yada, yada. Whatever. I'm not getting into company wars, am I? Because they are all good companies. And that is all Nelson used to say. It doesn't matter if you put 100,000 in a policy or 10,000. It's all relative. It's all going to grow the same. And it actually does. Nelson was right yet again. And so the life insurance company has a conference every single year. This is what I find interesting is there are a lot of new agents writing business with One America because of the fact that other companies have demutualized or whatever. Other companies' performance maybe isn't as good. They're moving around and about. And a lot of agents write insurance with a lot of different carriers. Now, One America fits what we are doing here without the bank and farming without the bank perfectly because they do have more flexibility for premium than 99.9% of other companies out there. That is super important when we are writing with business owners, farmers, because we don't know what our income is going to look like. However, all of these new agents that have shown up at these meetings are always super impressed with this conference every year. Now, I've never been to another insurance company's conference. Apparently, they're super boring. This one is not super boring, and I absolutely 100% love it. I go every year. I never miss. They tell us exactly kind of what's going on with the company financially. They're answering any questions that we have. And so I was able to really get a hold on what is going on kind of in the financial world with the company. And I wanted to share that with you guys because these are things that if you're not doing business with me, then you may want to be looking at these things and educating yourself on the company that you do have insurance with. And so the one thing that I found interesting is the chief investment officer of this company. I have heard from these people in this position before. Not particularly this guy, but other people that have been in the investment side of the life insurance companies have said every company has the same pool of money to work with. It's not like one company has some miraculous different thing than another company, and they don't. Because if you actually look at companies' portfolios, yes, you can go to each insurance company and look at their portfolio, see where their money's at. If you look, they almost all have their money allocated the same way. A lot of what happens in an insurance company comes down to their CEO, what's happening with the chief investment officer, how they're managing stuff, how their contracts are written, all that good stuff. Anyway, so it was interesting. He made a comment and he was talking about the S&P, that AI right now is making up 65% of the S&P growth. That is crazy. I don't know if that's good, that's bad, that's scary. I'm kind of neutral to it because I don't see AI as a threat. A lot of people think AI is going to be this big mean machine. And I don't see it that way. They already know everything they want to know about us. Like, seriously, nobody's hiding, in my opinion. And so if they want to have AI there, whatever. Like, AI can help somebody do a much better job than they're already doing. And we already know that we are losing workers in this country. And so if we can still produce the same with the help of AI, fantastic. your stuff's being sold anyway, my 2 cents. But I thought that that was very interesting. And I'm going to reference notes as I go through this because it's a lot. And so I'm going to reference notes. I also thought it was interesting, and I've heard this before in some financial podcasts, that a recession starts with industrial production, and those people that work in industrial production are the first to be laid off. So they have really, as a company, they're always watching the employments. They're watching all of the industrial production numbers. They know based on history of 145 years what is going to set us off into a recession and what is not. Now, they were talking about soft landings. They were talking about, did the recession start already? Has it not started already? Everybody has their 2 cents on that. So I just kind of ignore that piece of it at this point because even the Wealthy on podcast, I'm to the point where I'm super frustrated even with them because, and I've told you guys a million times to listen to that podcast because I do like it. But all they're doing is predicting and nothing's happening and they don't know what they're talking about any more than anybody else knows what they're talking about. The stock market is just nothing but predictions. The economy is nothing but predictions. And I frankly get tired of trying to plan around all of these predictions and nobody knows what the hell's going to happen. And so therefore I'm just I'm done. I'm just going to live my life. I'm going to do my thing as best that I figure I'm with the information that I have, but I'm not going to go down some rabbit hole and attach myself to one prediction or another because nobody knows anything. And what the life insurance company was saying about a recession is no different than anybody else. We should already be in a massive recession and it should hurt. And that interest rates still need to continue to come up so that we can slow down inflation. That's what everybody else is saying as well. Everybody else has said we should be in a recession. We are not. Is it going to be a soft landing? They don't know that any better than anybody else. But they are planning for some of that stuff. And so it is super interesting. This was also interesting. I know that most companies have their money in bonds. That is the majority of most mutual companies' portfolios are bonds. It was nice to hear that 60% of those are A-rated bonds and they are, very, very little to no risk. Another place that most of the companies have their money invested is they are lenders of real estate. And so they lend money to people that are buying real estate. And it is not single family homes. It is strip malls and those sort of things. The one thing that he did not mention that I have talked to them before about is that typically when a life insurance company will lend money to somebody to buy a strip mall or a big office complex or what have you, that is a 40% loan. 60% needs to be equity. No, I'm sorry. 40% needs to be equity. 60% they are loaning. And so it is not like they're going to the bank and putting 20% down. There is a 40% equity in that building before the life insurance company will lend any money. Now, this is the big question that I get when I talk to my clients. They will say, well, Mary Jo, nobody is going to the office complexes. All of these brick and mortar companies are shutting down. And so what kind of businesses are they lending on? Well, ironically, I have heard before that they are grocery anchored businesses. So there has to be a grocery store in the strip mall, or there is a grocery store in the strip mall. So there has to be a big lease with that because people always need to eat and they know that that person is always going to pay rent. So they're not going to have some zero delinquency loan out there that no one can pay rent on. But it was also interesting to hear that they look for grocery stores and then some big business as a anchor. And that would be a Lowe's or a Walmart. And so obviously if there's a big chain in there that is a very stable chain, they are going to be more likely to lend money on that building. So I found that interesting. I cannot imagine that any other insurance company does that differently because they have been around forever. But something interesting that most agents don't care to know or share, I find that kind of stuff fascinating. And right now, like with One America, there's 0% delinquency in any of those loans. Now, that I did find fascinating because in an environment where we are today, and a lot of these, we're just coming off of COVID. And I still expected that COVID probably shut down a lot of businesses. People were not able to pay or they had to default on a lease. I did expect that there would be some sort of delinquencies, and there are not any. Even during COVID, there was a very minor number because I did call the company and talk to the financial officer about that. And it was very, very minor. But again, they're doing it being smart. There needs to be big box stores, grocery stores, those sort of things, so that they are mitigating their risk. The other thing that was interesting to hear is that One America, even though it's a small company and a lot of people may not have heard about it, they do have a COMDEX rating of 95, which means they're in the top 95 percentile of any other life insurance company out there. That was interesting information to me because people are like, oh, I don't know them. Who are they? All that good stuff. The other thing that was interesting is I asked about cryptocurrency because so many of my clients are asking about cryptocurrency. Are the insurance companies investing in crypto? What's going to happen if the banks fail? What's going to happen if the US dollar goes digital? And so I asked about crypto inadvertently. That's not what I asked, but that's what he answered because the question has come up so much. And he said, we do not invest in crypto, which I didn't care to know that, but it was an interesting, comment because a lot of people within the infinite banking world are crypto fans because they are libertarian and libertarians tend to be crypto fans. What I found interesting is he's like, we don't invest in crypto because we need cash flow to pay claims. So there's no cash flow being generated from crypto. Somebody else asked, why don't you guys have gold in your portfolio, actual precious metals? And again, because it doesn't produce cash flow. Is it a good asset? Yeah, probably. But it doesn't produce any cash flow, and we need cash flow to pay claims. So think about it. They're doing hard money lending essentially, and that is producing cash flow. So when you look at what life insurance companies are doing to make money, it's not investing in oil and things that, well, oil would produce maybe some cash flow, but we're not going to produce in crypto. We're not going to put money in the market. We're not going to put money in precious metals because there are claims that need to be paid and money needs to be coming in to pay those claims. I mean, the money needs to work. And isn't that what Nelson tells us? For infinite banking, money has to flow. Just like banks make money because it flows, money has to flow. So I thought that was super interesting. And then there was a comment made by one of the home office staff that people buy uncertainty in the market. And as humans, we want certainty over uncertainty. And if you are looking at whole life insurance or you have a whole life insurance product, the reason that you do is because of certainty. I am not a risk taker. Everything that I do is very conservative. To some people that it may not be, but compared to others in my industry, I am very, very conservative. I am slower to do things because I want the certainty. It is the whole reason that I even was interested in infinite banking and why it resonated with me, because I was sick of the market. I was sick of the uncertainty. I wanted to know that I was going to have this money available to do whatever I needed to do with it. Then we had a individual by the name of Bobby Samuelson, and they had brought him in to do a presentation. And if you don't know him, he has a business called The Life Product, and he is a consultant for life insurance companies, and he analyzes life insurance companies and where they have their money and what they're doing and all that kind of stuff. And it was really interesting to have him come in, and he talked about the certainty of whole life insurance. And he told a little story, which I found very interesting for a guy that works basically in investments. I mean, he knows what he's doing. And he had some extra money. He called his financial advisor, and his financial advisor said, well, here are your bond options. And there's all these different portfolios, and we can mix and we can match and we can do whatever. And so you just tell me how much you want allocated to each type of bond. And he said it was so confusing that he's like, there's no way the general public is going to understand this. And he said after, a couple of days of stewing about it, he just called his financial advisor and said, you know what? I just think I'm going to just buy some life insurance. Because why? The bond portfolio is the biggest piece of the life insurance company's portfolio. And they're mixing and matching that in such a manner that they know they're going to have the cash flow. They know what their rates of return on that bond portfolio are going to be. And so I've always said, if you're going to buy bonds, why not just buy a life insurance policy and have that bond portfolio professionally managed? No different than commercial real estate. If you're going to go buy commercial real estate and then majority and yet another large portion of their portfolio is commercial real estate and they know what they're doing because they've been around 100 and some plus years, could we just invest in some whole life and then we will reap the rewards of that along with everybody else that's done the same? Makes sense to me. If we want to go do additional stuff, we can borrow against the cash value to go do additional stuff outside of the policy. But I found it very interesting that Bobby shared that he himself just said, forget it, I'll just go buy life insurance. And then just to kind of wrap up everything that, this is just a very short version of what I learned, but to wrap up everything that was highlights, the last highlight was Bobby going over indexed universal life and how badly the companies are manipulating the illustrations because the government has come in and said, hey, or the IRS has come in and said, hey, you can't illustrate that way. And they've put regulations on these insurance companies of how big of a rate of return they can illustrate at. And so if I remember correctly, based on Bobby's presentation, the company cannot illustrate over 5%. But now what the companies have done is they've manipulated their numbers to the point where they're going to give bonus returns. And so the bonus return can go on top of what the regulation shows. So they're still running returns at 8.5%. And Bobby even said there is no way. He's like, if you put money into a indexed UL and you have 2 bad years, that policy is not going to perform. It's going to lapse. And I have to go back and rewatch this presentation, but that was absolutely eye-opening because all we are hearing about in this marketplace right now is people using IUL. And he verified IUL is not going to work for infinite banking. It is not going to work. So all of these people out there trying to sell infinite banking, and guess what? It's not going to work if you are buying an IUL. There is a reason Nelson said to buy whole life insurance. And so many people out there are not listening because they are chasing rates of return. Now, everybody that listens to me knows, don't even bother asking me about a UL, a VUL, or an IUL. I'm not giving you one. I'm not running it. I'm not looking at it because it is not infinite banking. If you want a rate of return, for heaven's sakes, do not wrap your death benefit up into the life insurance policy. Just go buy yourself an IRA and play the index there if you want. But this whole indexed UL thing is very, very scary. There was a group of us when we left that meeting, one of us in the group said the exact same thing that I have been saying for years. How can the insurance department continue to make this legal? Your insurance departments are out there to protect you, yet they are continuing to allow these products to be sold that are based on these arbitrary numbers. It was extremely eye-opening when Bobby showed that they go back 20 years. IULs didn't exist 20 years ago, but yet they're going back into their so-called IUL portfolio from 20 years ago. But like, it's a made-up portfolio. He was showing us slides that were crazy unbelievable. And so if you are caught up in that IUL world or you have an IUL, please send it over. I am happy to look at it, but chances are that thing is never going to perform the way it was illustrated because they are manipulating the illustrations. Now, as Bobby also said, there are some of them that IUL works if it is funded correctly. Universal life works if it's funded correctly. Variable universal life works if it's funded correctly. Everything works if it's funded correctly. But if you're not funding any of these correctly and the agent is not educating you, you have a 99% chance that it's not going to work. You guys, I've seen 2 in 13 years, 2 universal life policies work. And universal life is not indexed universal life. It's a whole different animal. Go back to my podcast and listen to that. So it was just so super awesome to have Bobby come in as a complete third party. He is not part of the insurance company. He is not part of any insurance company. He evaluates insurance companies and their products as a third party to come in and say, I bought whole life and whole life is what is safe, not these other products. So if you are wondering, should I be buying whole life? Yes, you should. Did I buy the right product? Yes, you did. If you bought whole life and if you bought it from me, it's structured correctly to be set up for infinite banking. So something interesting. And again, I look very, very closely. Insurance companies, I will look at their financials. It's called their vital signs. I will look at that. So a lot of people say, well, why do you do business with this company? Because of their vital signs, because they are conservative, because the people running the company are good people, because they have the flexibility. There are lots of things that we're looking at that other companies are not quite able to give my client, or they're not quite performing on, that I think is a little bit more risky. Anyway, that's my 2 cents. That's the update on the life insurance side of things. If you have comments, questions, concerns, please let me know what those are. MaryJo@withoutthebank.com. Otherwise, that's all I got for you today. You have a fantastic rest of your day.